Welcome to Alpha Wolf Capital. I'm Tim, and I want to personally thank you for stopping by. Between the OTC, New York Stock Exchange, and NASDAQ, there are over 22,000 companies traded publicly. I feel that small businesses are the backbone of America. The number one reason for this channel is to help small companies gain exposure with potential consumers, investors, even partners. Take, for example, today's guest. CEO Ron Glibbery and CFO Jim Sullivan from Peraso Inc., ticker symbol PRSO. Peraso is a pioneer in high-performance 5G mmWave wireless technology, offering chipsets, modules, software, and IP. I'll let Ron and Jim tell you more about their technology and what makes it such a game changer. It's important for you to understand that this is not a paid-for promotion. I do not collect compensation for the interviews I do here. I do look for companies that could potentially provide an above-average return on investment, but that is not the primary reason for the channel. There's a thing called impact investing. It's tied to environmental, social, and governance. I think that is a very narrow definition of what impact can be. By helping a small company become a large corporation, if you and I can become ambassadors of a product because the values of that company align with our own, think of all the jobs that will be created as that small company becomes a big company. Think about the community that that company is in. Typically, they thrive along with the company. This channel is to help companies that are relatively unknown become known so that they can build a following and they can have brand ambassadors that share their vision, share their mission, and are willing to do what they can to help have a positive impact on humanity. That's what this channel is all about. This video is for educational and entertainment purposes only. I am not a financial advisor. I recommend highly that before buying any security, you speak to a financial advisor and do your own due diligence. Hey everybody, Tim from Alpha Wolf Capital coming at you with a new interview to an exciting company with some exciting technology that I think is getting to a place where some use cases are starting to at least excite the CEO and CFO of the company. We have Peraso, which is ticker symbol PRSO, traded on the NASDAQ. And I've got CEO Ron Glibbery and CFO Jim Sullivan. I want to thank you guys for coming in and sharing your story.
Pleasure to be here, Tim.
I appreciate the opportunity.
All right, so Ron, I'm going to ask you your background. How did you get to? You're one of the co-founders, right? How did you get here?
Well, a little bit of background. My degree is in electrical engineering, so I started in the semiconductor industry in the early 90s with a company called LSI Logic, who was really a pioneer in semiconductors. Was with them for about a decade and did my first startup with, eventually with a company called Intelon, who did power line networking, whereby we used the power lines in your home to facilitate residential networking. Really turned into a technology that enhanced wireless technology and got you to places in the home that wireless couldn't reach. So that company eventually got acquired by Qualcomm, and after that, having been in that field, I felt that wireless technology was a terrific technology, but was actually almost too popular. And my thinking was that at the time that eventually the wireless spectrum would get saturated, at least the spectrums that people were working in, which were below 6 gigahertz. So at the time, I actually teamed up with a professor who was an expert in what we call millimeter wave technology. And millimeter wave technology exists at very high frequencies. And the thinking is that eventually, as the lower frequencies got saturated, with applications such as Netflix or sports channels or TikTok, YouTube streaming. People would need more bandwidth, more spectrum, and they would utilize the higher frequencies that we were doing our work in. So that was actually 15 years ago. So it's taken some time, but over the last 5 to 7 years, certainly you've seen that real uptick in demand. And we think now is really we're starting to see that real acceleration in terms of demand for that increased bandwidth capability.
So you and I talked before we went live here, and I guess the question would be what were the challenges with this technology, and have those challenges been overcome?
Yeah, so probably to summarize it, the main challenge of our technology is that it doesn't really go as far as traditional technology, and it's also subject to blockages through walls. And even though it can get through walls, it's not as robust. And even things like rain can dampen the performance. So as part of our development process, we implemented a technology called phased array technology, whereby as opposed to traditional wireless technology, which exudes the wireless signal everywhere, we created what we call a pencil beam. So we focus the energy like a laser beam, so the energy is very concentrated, and that solves most of the problems with the technology, which includes distance and even in many cases blockage. So our what we refer to as phased array technology is the key to enabling these high frequency spectrum. So the phased array technology was a critical aspect of our development.
So who is your ideal customer? Who's your target market?
There's really two markets that have emerged, for us that we're addressing that and really take advantage of this ability to create these pencil beams. So the first is what we call fixed wireless access. So our technology, another aspect of the technology is very, very high speed. So we provide data rates of 2.5 gigabits per second, which I know it's a techie term, but if you compare that's really comparable to fiber in performance. So the first market that we're selling into is what we call fixed wireless access or broadband access. So this is for people that don't have access or have access to the internet, but it's actually quite poor. So we provide excellent broadband service in the order of 1 gigabit to 2.5 gigabits, and so that's about a $250 million market for us, and that's the first market we're going into. So the idea there is really providing globally on a global basis anybody in the world with very, very good internet access.
So if I wanted to try you guys out instead of who I have,
Yes.
just Joe Blow consumer, what's that going to run me a month?
Oh, we run. It depends on what your service provider is charging you, but typically we're $50 to $70 a month for a gigabit link, so it's very, very reasonable.
Typically 50% of is that what you said?
$50 per month.
$50 per month.
Yeah, 50 to 70. Yeah, so very, very competitive with any broadband technology in terms of the monthly charge.
And what would I need from you to have that set up?
So just in terms of the supply chain, if you will, Tim, like we're a semiconductor company, so we provide computer chips. Our customers are what we call OEMs, so they make the boxes, and then the box makers sell their boxes to service providers. So there's kind of three levels. We're the semiconductor supplier. We sell to the box maker. The box maker sells to the service providers. So for you specifically, or for anybody, they would have to find a service provider in their area, and there's service providers all over America, all over the world, frankly. And you would have to check and see whether they utilize our technology. And it's public information, but our lead customer is a company called Ubiquiti, who's a very, very large OEM that sells equipment into the space. So as long as the service provider uses Ubiquiti equipment, which is highly likely, then you would be able to utilize our technology.
Okay, so I would still have to go through some, I guess, a Cox
Right. Or
or
equipment.
okay, got it.
Absolutely. And we're the core technology suppliers. Ultimately, we would have to go to a service provider and establish a contract with that supplier.
So I mean, you've got a limited number of, that's the issue, right? You've got like I've got CenturyLink and Cox, I think are the two players, maybe AT&T, right? So I think I got three of them, right? And that's the problem. I mean, they're all kind of neck and neck in terms of cost, right? I mean, ironically. So, but I could tell you the service of them is very, very different, right?
Right.
In my area, though, even though CenturyLink has a fiber program, they don't have any fiber in my neighborhood, so their internet absolutely sucks, right? And then I've got Cox, who doesn't have the fiber, but they've got their Gigablast, whatever that is, and their internet is I'm happy with that one. CenturyLink was an absolute horror. I mean, it's just a horrible, horrible service. So it makes me wonder if they have such horrible service because they don't have fiber in the ground in my neighborhood, and of course, laying that fiber is very costly, right?
Yes, it is.
Especially after it's the community is built, right?
Yes.
So they're probably never gonna come and put fiber in my neighborhood, but you would be the logical solution for CenturyLink, right?
Actually, to be quite frank, I mean, there are several cities in the US that have more alternatives. There's a company called WeLink, who's a customer of ours, who services, Arizona, Salt Lake City, Las Vegas. So they provide gigabit service and it's absolutely reliable. So if you want to try this out, give WeLink a shout. There's several other in the southern states that so it turns out in America, you won't believe it, but once you get past the big guys, there's actually about 2,000 small guys.
Is that
It's mostly geographical, to be fair, but most areas have several suppliers that utilize our technology. So I'm sure that you could find somebody in your neighborhood that would supply our technology. And by the way, you make actually a very important point, which is deployment cost, deployment and also maintenance cost versus fiber. So people call us the wireless fiber. So basically, we provide fiber data rates. And a key component of that, by the way, is the fact that we do fully symmetrical. So if you ever complain about your uplink, so if you're doing a call like this, you're trying to upload files, trying to send video to a friend, we do it just as quickly as you do downloads. So we're gigabit in both directions. So it's very, very high speed.
that's very unusual, right? I mean, because
It is unusual, yeah.
okay,
In the wireless world, it's highly unusual. Usually in the wireless world, you're looking at about a 10-to-1 ratio between download and upload, whereas we're 1-to-1 ratio. So that's an important factor. But I think more importantly, to your point earlier, Tim, was that our deployment versus fiber is significantly lower because the service provider puts a access point somewhere in the neighborhood, and then basically once that's installed, really lights up that entire neighborhood, as opposed to digging trenches for fiber. So our deployment cost, but also our deployment time versus fiber is substantially improved.
so I never knew. So I guess maybe that's what happens when you're a dumb consumer is you think you've only got three choices, but you actually have maybe it's because you think of the small guy, you think, how is he going to be competitive with the big boys, right? You're going to wind up getting some ratty service, but maybe start thinking about things a little bit differently, right?
Well, I just think of those old Avis commercials where we're number two and we try harder. So what you'll find, I think, with the smaller guys is that they try harder and they give you great service because a lot of it. So from a technology perspective, I think what consumers find is that our technology is highly reliable. But a lot of the times it comes down to who's the service provider and who's taking care of you. So it's a combination of that service with technology. So we take care of the technology side of things, which I can say is very reliable. So as long as you have a good service provider, you should be in good shape.
Got it. Okay, so the products that you make, So I believe you have 105 patents. Is that correct?
Yeah, I think the total is 105, Jim. Do you remember offhand?
With the memory, the
Yeah,
legacy memory business patents, that's
aggregate
about right.
is 5. That's
Yeah,
correct.
I think it's about 70 on the millimeter wave side.
Okay. So 105 patents. So
Yeah.
you've got some protection there, right? You don't actually make the chips. You create the technology, and then you sub out the fab.
Yeah, so our business model is like, to use an extreme example, is like NVIDIA. So we actually design, we have an engineering team, we design, we have a sales team that sells the chips, but we subcontract the manufacturing to a third party, in our case, TSMC in Taiwan. So that model is referred to as a fabless semiconductor model. So we don't spend the $10 billion on a fab, we just use it to build our chips for us.
Okay. And you've got diversified areas of fabrication. It's not just one.
Yeah, I think so. So actually, we have 3 chips, and one chip is built in Taiwan, one chip is built in France, and actually the other chip is built in New York State. So really, three locations today that we build our chips. So
Okay.
yes, and I do think these days diversity is a very strong, an important component of anybody's business plan, if you will.
Right. After the supply chain issues that we encountered from COVID,
Yeah.
uh, I think if you aren't diversifying your supply chain at this particular point in time, you probably shouldn't be the CEO of a company, right?
We all learned a lot of lessons during those 2 years.
All right, so Jim, let's talk about the cap table for a second here, right? So
Sure.
you went through a reverse split at the beginning of the year, right?
Yes.
And that puts you now at right around 11 million shares fully diluted, right?
Yes, just over that. About 11.3 million fully diluted. About current TSO is about 2.8 million.
Okay. So as I look at the chart, and I'm gonna move a couple of things here so that I can actually show the chart. I want to move your logo for a minute here, and I'm gonna move your deck, and there we go. I've got so what it looks like to me is, from a technical standpoint, the stock has just been in a kind of a holding period, right? We're just kind of going sideways. I think nobody's in control of the stock. Nobody's the shorts, longs, nobody's in control. It's just kind of building out a base. And that's actually a good thing because it's like it appears that the stock is waiting for news, right? Waiting for something to happen that gives it a direction to start moving in. And for a long time, you were and anybody can see this. I'm going to back the chart up 1 second here. So anybody can see that the trend was from the upper left to the lower right, right? But now you've got this massive base that you have established, and it's looking for a catalyst. What's the average volume per day? Volume's very thin, right? You got very thin, but you're
Yeah,
trading
well,
on that, huh?
no, I was just gonna say sometimes we'll have kind of a day that pops it and increases the volume, but I want to say it's somewhere around 60,000 shares a day, somewhere in that range.
Which is pretty thin, right?
Yeah.
It would not take much though to pop this thing, right? I mean, one really good news release and one good customer contract, and this thing could get interesting really quickly, right? Because you have such a small share count. So how many shares are in the float? Do you know, Jim?
About 90% of the total. So most of it is in the float.
Okay. Uh, how is insider participation on the stock?
Historically, we've had good insider participation. Most recently, back in June, one of our directors um, purchased about 100,000 shares, did a direct placement from the company. And then our chief technology officer also acquired some shares.
Okay,
So we have had, some recent insider buying.
that's always a good thing to see, right? I mean,
Right.
if anybody, if people are going out into the open market and buying shares that are within the company, that typically is a very good sign to me, right?
Yes. And that director buying, basically unregistered shares, right?
Right. So I would say that is so. Ron, can you share with me what's different about now than for the last that you said you went public in 2021, right?
December 2021. Yep.
How long has the company existed?
Oh, like since 2009, so 14 years, 15 years.
All right. So what's different now than the last 14 years?
We started shipping about 4 years ago, and we had a restrictive, like a restriction on our customer base. Basically, we were very limited in the number of customers that we could sell to, but that got lifted about a year and a half ago. So our pipeline, the big difference now is our pipeline's expanded. I mean, I just reviewed with our chief revenue officer, who we brought on a year and a half ago, to like 105 active accounts right now. So basically, what's different is that we got through the exclusivity period with our lead customer. That went away. We only had two. The problem we had a year and a half ago was an extreme concentration of two customers. Now we have, a very, very robust pipeline. So that's a major change for sure. And we expect to see some of those design wins starting to materialize now in the second half of the year. Tim, I think we talked about this earlier, but the other change for our company is that, unfortunately, kind of brought on by wars. So basically, the Ukraine war, the war in Israel, that, what's been found in those wars is that traditional wireless communications can be very easily traced and detected because it's basically ubiquitous. Whereas our technology, because of the pencil beam technology that I referred to earlier, makes it almost impossible to trace. Plus, it moves. So we call that a low probability, very low probability of detection. So in fact, stealth technology that's used in the battlefield. So we're starting to see some real momentum in the military markets in terms of using our technology for what we refer to as tactical communications. And so the military see this technology as a way to facilitate battlefield communications in a stealth mode. So that's a second, we think, very strong opportunity beyond the original opportunity of fixed wireless access. So that's another change we've seen over the last 12 months.
Okay, so yeah, I guess maybe I'm a little thrown off that $250 million is the size of the TAM for, I guess, what do you call it? The consumer end, right?
Right.
It seems like it would be so much bigger.
Well, I think it is like the big portion of it is bigger. I say the portion that we're going after is, if you peel back the onion, like our portion is about 250 million. It's basically in kind of unlicensed frequency bands. But we feel that's a realistic, but we can, like, frankly, at some level we could secure the whole thing eventually if things break our way. On the military side, I think it's kind of unbounded, right? Like we're doing quotes now where entire militaries are getting outfitted with our chips. So the volumes on the military side are substantially higher than 250 million, I would say. But we're still in the process of scoping that. No pun intended, but yeah. So we see the military opportunity as potentially much bigger than the original fixed wireless opportunity.
So let me ask you a question. The military this year, Department of Defense has because the way it works, the budgets is you either use it or lose it, right?
Right.
And they didn't this year get their budgets until May, right? So that means, and they have until September 31st, I believe, to spend their budget. So do you have any active quotes that are in with the Department of Defense?
Well, we have active programs for sure, but like in terms of seeing volume shipments, likely to be more of a 2025. I mean, I think we'll start shipping this year, but really the real volume we'll start to see it in 2025. I mean,
Okay.
like at this, even though there are budgets at the same time, you can imagine they go through very extensive, verification process on the technology. So I have to make absolutely sure, but we feel confident that we're making very, very strong progress with some really key programs in the military, and not just in America, by the way, around the world, that is.
So when you say the $250 million market that you're going after, and I guess you said the unlicensed, what does that mean?
So today, we have really two buckets of our products. One goes after what we say is unlicensed, and one goes after licensed. So the unlicensed portion is just a segment of the market. So if you actually, so we're going after, so it turns out we're really in millimeter wave. I would say the sole supplier. So we really see a very clear opportunity in the unlicensed part of the market. Eventually, we do have chips for the licensed part, but that's a good 2 years away before that we see the carriers. The licensed part is more the carriers. It is a much bigger TAM. You are correct, but right now that TAM won't start for a couple of years.
Okay.
So that's how we see things playing out on the fixed wireless side of things.
So when you say unlicensed, what specifically does that mean? I'm trying to determine who that customer is that you're targeting.
So unlicensed. So in wireless communications, I guess the really best examples that everybody knows is the wireless you use for Wi-Fi in your house. We all use Wi-Fi. That you don't have to go out and buy a license to use that. Like nobody has to license that spectrum.
Got it.
What you use on your cell phone is licensed. So the carriers pay billions for that spectrum, and only they are allowed to operate in that spectrum.
Got it.
And so those are the two buckets. So our bucket is in the unlicensed today, because that was kind of the low-hanging fruit for us. So we go after service providers that I talked about earlier that actually don't need to spend billions on a license, but can provide those internet services. Now, if you take someone like an AT&T or T-Mobile or Verizon, all of their spectrum that they pay for and is licensed, and only they can use that spectrum. They are not using millimeter wave technology today, although they have it in their portfolio. They do plan to deploy that, we feel, over the next 2 to 3 years.
Okay. So I guess, there's a program out there for the underprivileged, underbanked, right?
Yes.
Where they get a tablet and they get internet access, I think for free from the government. The government pays for it. Would those carriers potentially be somebody that would use your product?
There's a very, very good case study as we speak in Los Angeles, where Los Angeles City actually funded the deployment of internet services for about 280,000 people. And if you kind of look on Google in terms of what that looks like, it uses 60 gigahertz technology. It uses, so we're a core supplier into that internet service provider. So basically so you're exactly right. So there are absolute situations where we provide like top level gigabit, level internet service to, kind of underprivileged people in certain
You provide better internet because you're 1-to-1 ratio of upload download, right? I mean, you're providing a better product than what I'm getting.
I hate to say it, but that's true. No, I mean, so that's you're right. You've touched on a really important advantage of the technology. So what's happening today is that, applications like Twitch, for example, where people want to stream into the internet as opposed to getting video off the internet, are becoming very important. Conference calls are becoming very important. So these are all two-way communications. So our technology is completely symmetric. That is, our gigabit download is the same as our gigabit upload. And so that's becoming a very important part of internet service providers, is that they provide that symmetrical capability on their internet service. So all the internet that we provide is symmetrical. So you're exactly right, and that's becoming more and more of a value proposition in that market today.
Absolutely. I mean, I'm sitting here contemplating it right now. I mean, because when I have to upload my videos to it,
Right.
it takes forever. I mean, it takes longer than I want it to take. Let's put it that way, right? So, I mean, if I can save my time, if I can cut my time down, I absolutely want to do that, right? I mean,
No, exactly, and there's many applications. Like, for example, as people, and by the way, if you work at home, for example, and a lot of people these days work at home, synchronizing your files so you're using the cloud. So cloud services is a big factor here as well, because if you want to utilize the cloud, you need to send files up into the cloud. You don't want to be waiting around while those files are uploading before you can do anything else on the cloud services. So it's really important to have that two-way, that strong two-way capability. And I think people becoming more and more aware of that requirement, and that's something that we satisfy.
interesting. Very interesting. All right. So how are you guys right now? The big concern with micro cap, small cap companies is having to raise capital, right? I mean, how are you on cash currently?
So we have not reported our June 30 quarter.
Okay.
Certainly like a lot of companies our stage, we have the standard kind of, we need to raise additional capital. We're managing our capital closely, and we just recently here in the last 2 weeks announced we had expected to exceed our revenue guidance for the June 30th quarter. So obviously the increased revenues will lead to reduced cash burn. So we'll be reporting a reduced cash burn for the second quarter.
Okay.
We're in a position where we would like to raise some additional capital. Just so we're not dependent on, customers, et cetera. And just also when you're out there trying to win new business, the more cash you have on the balance sheet as a small supplier is a key factor. But obviously we're looking to be, opportunistic, considering things right now. We don't have an ATM program. We might look at that. We recently our shelf registration statement was expiring. We just refresh that as part of good corporate housekeeping. So we're, kind of evaluating that as we've got, we were really hit very hard over the last 2 years by the inventory correction in the marketplace. We've got those two customers, one of them is involved in that LA deal that Ron mentioned for the, low income, wireless access, looking to have them turn on. We just announced an initial production order from a major customer in South Africa, which is a brand new market for us. And the advantage of some of those, you're collecting cash up front to help us out. But, right now our position is we are, looking to raise additional capital, but looking to do it, smartly. And, obviously we don't need a huge number, but it would help to have a little more cushion on the balance sheet.
Understood. I mean, in this climate right now, that's the biggest issue with micro cap and small caps, right? Because nobody wants to get in front of a capital raise where they don't know what the dilution is going to be, right? I mean, that's what it comes down to. So it's like, okay, well, if I know they need cash, plus the deals out there are horrendous. They're toxic. I mean, 200% warrant coverage, not an ideal scenario. But I can say this, after 38 months of pain for the small and micro cap market, I'm starting to see signs of life. And I don't know what's going to happen with the upcoming election, but if things change, and then we get the Fed, to cut, I think small caps and micro caps have been beaten unfairly for longest period of time I've ever seen. Actually, I mean, they have just been getting pummeled, and I don't care how well they've executed or how good the story is, their stock is down, 70 to 90%.
Yeah.
That's unsustainable. You got Apple that can buy 17 countries, right, with their evaluation. And I'm pretty sure they're not going to go from 3 trillion to 6.
Right.
Right? I think there's a lot more of them that are down in this area that could double or triple in the blink of an eye, right? I think if rates start to come down, then I think money becomes less expensive and things start to normalize. Right now, I just don't think things are normal, right? So if you can hold out, that's a pot. Do you have any warrants that might trigger?
We've got a set of 6-month warrants that are coming up, expiring here. I think it's August 8th or 9th.
Okay.
They're obviously at an up price from where we sit today. We are targeting, we haven't announced an earnings date here, but it'll be, sometime here in the first half of August before the quarterly deadline. It's just, it's tough. We put what we thought was a great release about exceeding our revenue guidance, first production order for what we call our Dune platform, which is basically, enabling service providers to address fixed wireless in dense urban network environments, like shanty towns, places like that. They want internet.
Or Los Angeles.
Yeah, exactly.
Yeah, actually, let's talk about the Dune product because I saw it in your deck. What is the Dune again?
So Dune, so that's another reason why investors should take a look at Peraso, because another technology we've developed, Tim, is it's called dense urban networking. So basically, historically, the last 2 to 5 years, we've really been going after U.S. Rural, so rural environments where lower density. But what we've developed is a technology that allows us to go into high density urban area, very, very high density. So we call that Dune, so dense urban networking environment. And we've, again, in conjunction with our pencil beam, just have created a technology that allows for very dense customers. So that could be, for example, in Los Angeles that I mentioned, where the housing is very close. But we also want to deal in the townships of South Africa where the houses are 10 feet apart. And the problem they ran into, it's exactly the thesis that we had 15 years ago, which was networks would get saturated. We've invented a technology that allows us to really exist in those high density environments. So that's what Dune is. So it really lets us shift into these very, very high volume opportunities, not just in America, but really around the world.
Okay, how many salesmen do you have?
Well, we have about 4 direct salesmen, but we have a lot of reps, representatives, and distributors around the world. So we have a Japan rep, Korea rep, China rep, Taiwan rep, even reps in the States. So 5 direct plus reps around the world.
Do you hold those reps to a quota?
We try to. I mean, right now they're just kind of getting. We just brought them on less than a year ago, so they're just kind of getting used to it. So no quotas today.
Okay. I mean, rep agencies are great. However, my experience with rep agencies is they got a catalog of stuff this thick, and they don't focus on specifically your product, right?
So for example, I think a good example there is the military, is the defense business. They actually are very plugged into defense, and so I find the reps are actually, as it turns out, we just did an analysis, and more than 25% of our pipeline came from the reps. Actually, now they don't have the capability to handle those accounts directly, but they pass them on to us. So they're really more of a conduit, I would say, today, as opposed to doing the direct sale. I've worked with reps my whole career as well. I mean, they go after low-hanging fruit for sure. But what they do a good job of is introductions. So we really rely on them to get us into a lot of accounts.
Excellent. Okay. What do you guys see as potential catalysts in the next 6 to 12?
Well, we're just focused on putting numbers on the table. I mean, we're increasing our existing rural business. We see the urban business is really taking off this quarter, and we see the military business, both especially in tactical communications, as being a real catalyst as well over the next 12 to 18 months.
Okay.
And I would add from the CFO chair the obvious ones: increasing revenue, particularly from our millimeter wave business, and then two, reducing the cash burn. Getting away from that mode where folks are doing the math calculation of how much cash in the burn. So showing that, we've made significant progress. We'll give we've taken a lot of steps to cut the OpEx. And I think also continuing to kind of show those numbers coming down to staying flat while the revenue and the burn are decreasing or,
you don't really have any debt, right? I thought I saw a hash mark in the debt area.
Yeah, no debt. No debt, just a couple of equipment finance leases that are fairly small. We've done that in the past. We had done some convertible debt, and fortunately, that was a very clean piece of paper back. This was even before we merged with Ron. So we tread very lightly on debt. I mean that's the terms of those. You've seen the debt spiral on some of those. Your best lender is someone, the last thing they want is to be handed the pink sheet and the keys, the pink slip rather.
Right. No, I mean,
right.
I was happy to see no debt, right? I mean, that is the killer, man. I mean,
absolutely.
Everything is manageable, right? As long as you don't have some huge debt overhang. And I mean, so to get the cash flow positive, how far off are you?
One of the things we need to manage here, there's two, key contributors. The primary, the focus of the company is the millimeter wave side. On the second side, we have the legacy memory business that came from OSIS, the public company, which we were forced into an end of life last year. The foundry basically said, we're discontinuing the foundry process used to make these chips. So you've got till, the fall of 2024 to place orders, and then we're done. So that's help. Obviously we were hoping to cash cow that business, run it for a while. It's a 70% gross margin business. That end of life, being forced on that, in some ways has helped because we pulled in a couple of years orders into the last. We started shipping back in Q3 of 2023 in the September 30th quarter of 23. So that is a nice source of revenue and cash right now. That's really helping us out. But right now we project those orders to cease in the first quarter of 25.
Okay.
We're based on backlog. We have non-cancelable backlog in hand. Also have received 30% deposits from some customers. And as that comes down, we need the millimeter wave to come up, right, and grow and replace that. So right now we'd like to be profitable, or at least have the burn to negligible, by the second quarter of 25.
Okay.
Or at least before then, starting I think this quarter show that okay, that's not so bad. That's not gonna eat up everything where they've got to go back to the market every few months. Like start to show that is really what we want to demonstrate this quarter and continue going forward.
I think an important adjunct to that is that we spend about 150 million on R&D on the wireless side of things. So what investors get is, basically that's water. We're not spending, we're spending very little now on R&D. And so what investors get right now is the advantage of that 10, 15 years of really severe R&D work. And you can like go on the internet and check some of these Facebook groups out. But, one thing we're proud of, Tim, is that customers use our technology to say the term they use is bulletproof. And it's taken a long time to get it bulletproof. And so from a technology perspective, there's been a lot of cash poured into that, but now we're reaping those rewards. So people coming into the company can take advantage of that. And as Jim said, and hopefully get us to the cash flow break even place, sometime in 25. But yeah, so this is not a company that's burning a bunch of R&D dollars because we've spent the dollars on R&D. Now we're spending money on getting the technology out there and getting customer shipping.
What do you think the biggest challenge is?
I just think it's time. Like, I think we're just knocking down these opportunities. I think it's just a matter of time. And then really the point that you've been making is just making, making sure we get to the point where we're a profitable company. I don't think there's any barriers in terms of a technology or market perspective. We're going to get there. So it's up to all of the management team to make sure that we, continuously make sure that we, we've got liquidity and we're going to get there from a market perspective. But I think from an opportunity perspective, we've got a very strong pipeline and we'll just keep knocking them off and get that revenue shipping.
I would say maybe one of the challenges is people just don't know who you are.
Well, that for sure is that's definitely a challenge.
Right?
So we're working definitely working on that. We've I don't know if you want to talk to that, Jim, in terms of what our plans are, and of course we couldn't agree. I guess what we didn't realize is like there's a lot of microcap companies out there looking for money, and so how do you get above that and get people to know our story? Of course, that's a huge, and for us personally, that's a big part of our time now is to get the story out there and make people aware of what we're doing.
Yeah, I mean, even if we don't, get them Ron and I were at a conference 2 weeks ago, and a guy did place an order sitting at the table.
Yeah.
Small, but a start. And having others, as a buy side guy said to me years ago, well, I'm going to hang around the hoop. So if nothing else, get folks hanging around the hoop. We're talking to you. We're talking to our capital markets advisor. Really just trying to get the story and explain to people what millimeter wave is. I think Ron, I equate Ron to my first public company CEO, a guy named Brian Martin at 8x80 GHT. Brian was a great evangelist for voice over IP 20 years ago. And I see Ron as that individual for millimeter wave technology. He's very passionate about it. He understands it.
The slight difference there is voice over IP, like everybody does now. And I think the amazing thing about this millimeter wave technology is that there's a very, very deep and large moat, like technology barrier. It's really hard to get right. We don't really dwell on the technology, but the technology here is spectacular, I would say. So we spend a lot
the antenna piece, Ron, right?
The antenna, like the phased array antenna, the circuits, the software is really fantastic. So there's just been a lot of money that new investors can take advantage of all of that R&D that we've done over the last 15 years. But to your point, Jim, I mean, VoIP for sure is everywhere now. But look at this call, we're doing it on VoIP, right? So VoIP is now
20 years. I'm talking 20 years ago, right? And I think millimeter wave is still in the early stages.
I just don't know that there's going to be there's going to be 15 guys that can do it, right? Because it takes a lot of energy to get it right? So we hope to be the dominant player.
It's funny that you say that because I think what is compelling to me about your company is the fact that to get it right, it is challenging, right? And I think the CEO of NVIDIA, this was just a few about maybe a month ago or a month and a half ago, said they tackle the really difficult and hard things to do, and one of the reasons that they do that is because just the fact that it is so challenging reduces the number of potential competitors because they don't want to do it. Right? And his philosophy is those that are willing to suffer the longest are the ones that will ultimately be the most successful.
Well, it's funny you say that because the first day I started at LSI was Jensen Huang's last day at LSI. Well, no, it was the first day I was in California, and it was his last day in California. He started NVIDIA that day, and he was LSI's best engineer. The guy was a rock star. So you've got one of the best engineers in the world starting one of the most complex technologies in the world, and who competes with them now, right? Like that's why they've got a $3 trillion valuation, is because nobody can duplicate what they've done. So what his words ring true with us, right? It's very, very difficult to do and to get it right. So we plan to really potentially crush any competitors. I mean, we we think it's just something that takes a long time, and we think it'd be very difficult for people to challenge.
And I think that your assessment, I mean, look, it took 15 years, but still, with the onslaught of all the video that's hitting the mark, I mean, I don't see that slowing down at all. As a matter of fact, I think it's going to increase dramatically because of drones and autonomous vehicles and just all kinds of stuff that's going to require a lot of bandwidth, right?
Drones is a great example because, as I mentioned before, because traditional wireless technology can be detected now, we really feel drone will be a good market for us because of our stealth capability on the battlefield. So we think drones will be a real opportunity. But yeah, I mean, everywhere you look around, wireless technology is becoming more and more important.
Right.
So those, that spectrum is getting saturated for free. I mean, like just getting back to this dense urban technology. I mean, the reason we're beating out traditional technology is because traditional wireless tech, it's exactly our business thesis. The existing wireless bands are getting saturated. That's exactly what's happening. So what we predicted is coming true. It took 15 years. Well, it took about 10 years actually, because it really started about 5 years ago. But yeah, we're seeing that day to day in real world examples. So.
And you've got a hell of a head start on a lot of people, right?
We've hung in there. I think the other thing that I've heard Jensen say is he runs the company as if they're going to go bankrupt every day, right? So not that we're going to go bankrupt, but you gotta, if you suffer through the tough times, it's gonna pay off, right? If you can hang in there. And we really feel like we're gonna hang in there and flourish.
And that's the way I feel about a lot of the small and micro cap companies that are out there today. I mean, there are companies that weren't able to weather the storm of a pandemic, of the worst supply chain issues in the history of mankind,
right?
The fastest interest rate hike cycle in the history of mankind. I would call that a challenging business environment, right?
Yeah.
If you can weather that storm and get through without destroying your cap table, and you have a viable product, I think that when things begin to normalize, I mean, right now you got 7 companies taking markets to new highs, right?
Right.
It's not sustainable.
No.
It's just not sustainable. That money will shift. It's been 38 months, 39 months. The companies that have been able to weather the storm of that I mean, look, it's made you smarter, right? More efficient. These are good, positive things. Has it been fun? No, sucked. It sucked for me as an investor, right? I mean, but what I continue to see execution and determination, and passion, those things that they're going to pay off at some point. I can't tell you when, but they will pay off, right? And that's what I love about the small cap. So my whole thing is, it used to be just about me. I started investing because I just want to make money. I didn't care about anything else. And then I wanted to help retail investors become smarter investors. And I would say I was marginally successful there. And then what it dawned on me recently, I came into this world with nothing. I'm 99% sure I'm leaving with nothing. So what matters is what you do while you are here. And what better way to have a positive impact on humanity and people's lives than to help a small company become a big corporation,
Absolutely.
Right? You go from a $50 million market cap to $1 billion market cap. How many lives do you impact? How many people get hired and buy houses and move to the community? I mean, lots, there's a thing called impact investing, but it's narrowly defined to ESG, environmental, social, and governance, which I think is a very stupid way to narrow it down. I mean, yes, the environment is important. And there are companies out there doing things to make the environment better, right? But there are just helping a small company, becoming a brand ambassador of a company that you like, that, maybe is in the industry that you understand and are providing a product that is needed. That's what invested. That's the awesome part about the stock market. You could become part owner of a company that is trying to do things to make life more efficient or safer for humanity, right? And you can be part owner of that. That's what's so cool about the stock market.
It's amazing. I mean, actually, just to extend that a little bit, I mean, again, because of the price points we've hit, with the performance we've hit, we think there's an opportunity to bring 1 billion people online that have crap internet today. Can you imagine how that's going to change the world? Like people who have extremely high either IQs or ambition or whatever can't get internet today. It stifles them. Now they're getting the internet. Like we're changing the world.
And that's what people need to see. And they don't know that, right? They don't know.
They don't know that. No.
And that's the thing. If that's something that aligns, if you would like to have people to have around the globe excellent internet, right? This would be a company that you would want to support. And there's a lot of ways to support. It doesn't have to be investment dollars. It could just be sharing information about the company, right? Letting people know that you exist and what makes you different. That's how you can help. I mean, we spend a lot of time, human beings spend a lot of time, I think. There's two types of human beings. You're either someone that builds something up, or you're someone that wants to try and tear shit down, right? That's really what it comes down to. I mean, if you want to jump on the bandwagon and bash somebody, it's great. I mean, what does that do for humanity? Not a damn thing, right? You want to do something for humanity, find the company that does something that you care about. And this is a good one, right? That's why we're here today having this interview. So, you guys feel as though I missed anything?
No, I thought that was terrific. Just you really did a fantastic job, and we appreciate the time for sure. But we think we covered all the important things we needed to cover today.
All right, so this is what I'd like to do. You have something that maybe potentially is coming up that could be meaningful for you guys, you think?
Yeah.
All right. So
like a contract, for example.
Yeah. So if you have something that comes up that is meaningful, significant, we'll have you back and we'll do a follow-up. Sound like a plan?
I love it. Absolutely.
All right, guys. Hold on one second. I'm going to shut this off. Wait. If you are not familiar with the name, but the company intrigues you, I recommend that. I'm not telling anybody to buy the stock, right? I think it's in an interesting spot. I think that it's kind of been trading between 120 and let's call it 165 or so. That seems to be your ceiling of trying to get through 165. I don't care where the stock trades throughout the day. All I care about is where it closes, right? So if you actually can wind up closing above, I would say 175, 180 and hold, I think that would be a very positive thing, right? Okay. That then your ceiling becomes the floor. So yeah. maybe what's holding that up is the concern of the capital raise, right? So that could be what's keeping you in this zone. But here's what I would recommend. If you're interested in following the story, you go to the investor website, investor relations portion of the website, and you sign up for email alerts. That way, when news does come out that is meaningful, it gets sent directly to your email. You don't have to go search the internet to find out why the stock is moving. It's right there in your email. Thank you for tuning in to another CEO and CFO interview here at Alpha Wolf Capital. Today we had Peraso Inc., Ron Glibbery, and Jim Sullivan. Ticker symbol PRSO. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And make sure you smash that subscribe button. All of those things are super important to us here at Alpha Wolf Capital, and we appreciate you taking the time to do that. Until next time, stay safe. Alpha Wolf Capital wishes you the very best of success.